Good day, learners. You are welcome to another class of Act 422, Financial Accounting and Reports. In the last class, we discussed accounting and reporting policy. And there we learn about the essentials of accounting policy. We explain the rudiments for selection of accounting policies. We discuss the requirement for changes in accounting estimates. And we defined the term prior period error. In today's class, we are discussing accounting for property, plant and equipment, PPE. PPE is dealt with by IAS 16. IAS 16 discusses PPE. And in today's class, you'll be able to explain the essentials of property, plant and equipment. You'll be able to discuss the recognition principles of items of property, plant and equipment, and explain the cost of an item of property, plant and equipment, and then discuss the disclosure criteria of IAS 16 on PPE. Property, plant and equipment. The conditions of accounting procedure for property, plant and equipment have their own model of classification. And in their classification, it is essential for us to discuss the fact that property, plant and equipment take a significant part of the balance sheet. The property, plant and equipment are tangible items that could be felt, that could be seen, and that could be held. They are defined as held for use in the production or supply of goods or services for rental to others or for administrative purposes, and they are expected to be used during more than one period. They are expected to be used during more than one period. The recognition criteria for PPE. The recognition criteria for PPE. IAS 16 says that an item of property, plant and equipment should be recognized as asset if and only if A. It is probable that future economic benefits associated with them will flow to the entity that is concerned, and B. That the cost related to the item can be measured reliably. There are two recognition principles specified by IAS 16 for items of property, plant and equipment. One is the future economic benefit that is derived from the PPE, that the future economic benefits are inherent in the item, and that the future economic benefit will flow to the entity that is recognizing such item. And B, that the cost related to the item can be reliably measured. For the purpose of class discussion, let us examine this scenario and see what our opinion will be regarding the classification. The scenario goes thus. ABC Limited is a food and confectionery processing company. In compliance with NAFDAC requirements, personal protective materials such as factory jackets and helmets were acquired for use in the factory. These materials, which estimated lifespan was 3 years, cost the company 5.5 million naira. Required. How will you advise these materials to be classified in the financial statement for the period? Give reasons for your advice. One thing that we should note regarding these materials is that they are being used in the factory, and for what is being used in the factory, they must be used in the processing of their manufactured items. Number two, these items, the lifespan was estimated to be 3 years, and then the cost to the company as given to us in the illustration is 5.5 million. How are we going to classify these items? The material in question are to be classified as property, plant and equipment, and the reason for the classification as given from the question are: 1. The materials are required to be used in the production process because they are being used in the factory. 2. Future economic benefits associated with the materials will flow to the company. 3. The cost can be measured reliably. We have been given the estimated cost, the cost of the item, to be 5.5 million naira. And lastly, materials are to be used for more than one period. They are to be used for 3 years. Therefore, these materials, these personal protective materials, are to be classified as property, plant, and equipment. Initial measurement of property, plant, and equipment. Initial measurement. When we speak about initial measurement, we are speaking about the first recognition of the item. The first recognition of the item in the financial statement. An item of PPE should initially be recorded at cost. The cost of an item of property, plant, and equipment consists of the following. A. The purchase price of the item after any trade discount or related deductions of rebates. B. Costs that are directly attributable to bringing the item to the location and condition necessary for it to be capable of operation as intended by management. And these costs include the labor costs arising directly from the construction or acquisition of the asset, the cost of site preparation, initial inward delivery and handling costs, cost of installation and assembly, cost of testing to assess whether the asset is functioning properly, net of sale proceeds during the testing period. I will need to stress this cost. The cost of testing are costs of demonstrating the effectiveness and the efficiency of the new installation. Many items of property, plant, and equipment, before they are put into operational use, will be tested. The cost of their testing is the cost that will confirm whether they are to be purchased or not. So the cost of testing less items that are sold will be part of the cost of acquisition of the item, and then the provisional fee that is directly attributable to the purchase. C. The estimated cost of dismantling and removing the item and restoring the site on which the item is located, as long as the obligation to meet those costs is incurred when the item is acquired. Item of installation, dismantling, and removal are part of the cost of the item. In general, therefore, administrative costs and other general overhead expenses are not part of the cost of an item of property, plant, and equipment. The recognition of costs ceases when the asset is in the location and condition necessary for it to be capable of operating in the manner intended by management. Case study 2. Case study 2. Ojuelegba Bookshop is located in a high density area. As a measure to conform to business regulation on the wake of COVID-19 pandemic, the company purchased one electrically operated hand washing machine that is fitted with sanitizer dispenser on April 1, 2020. The related cost of purchase was made up as follows. List price of the machine, 7.5 million. Trade discount, 450,000. Delivery charge, 64,500. Installation cost, 300,000. Small spare parts, 78,000. Testing cost, 67,500. Servicing contract for the year to 31 March 2021, 120,000. The testing cost in respect of liquid sanitizer use during the testing period, of which quantity remaining amounted to 22,000. We will now proceed to the board to solve this example. And as we go to the board, be mindful of the question that is asked in this example. Subsequent expenditure. Subsequent expenditure. By subsequent expenditure, it is meant expenditure after the initial recognition of items of property, plant, and equipment. And it is the recurrent or routine nature expenditures that are incurred after the initial recognition of an item of PPE. It should be noted that these routine expenditure are not capital in nature. They are not capital in nature. and these include regular servicing, repair and maintenance costs, which usually consist of labor costs and the cost of small parts, and are incurred and accounted for as an expense in the period to which they relate. However, expenditure relating to PPE after their initial recognition should be capitalized if it meets the recognition criteria for an asset, and such expenditure should be recognized if it improves the asset by enhancing its performance or extending its useful life. If it is for replacement part, IAS 16 indeed requires that the cost of major replacements should be treated as capital expenditure and recognized as an addition to the carrying amount of the asset concerned. The carrying amount of the part that has been replaced should be simultaneously recognized. The cost of major inspection is recognized in the carrying amount of the asset as a replacement. If an item of property, plant and equipment which has been recognized as an asset needs regular major inspection, the cost of each inspection is added to the carrying amount of the asset when it occurs. Any remaining carrying amount of the cost of the previous inspection is derecognized. In general, therefore, administrative costs and other general overhead expenses are not part of the cost of an item of property, plant and equipment. The recognition of cost ceases when the asset is in the location and condition necessary for it to be capable of operating in the manner that is intended by management. The carrying amount. We have been speaking about the carrying amount. The carrying amount is addressed by IAS 16 and is defined as the amount at which an asset is recognized after deducting any accumulated depreciation and accumulated impairment loss. So what are we saying here? When you have the cost of acquisition and then you will add up the costs subsequent to acquisition, all the costs incurred subsequent to acquisition, including major replacement costs, performance enhancement costs, inspection costs, you will add them up to the cost of acquisition, and then you will remove the accumulated depreciation, you will remove impairment losses if there is any amount that is left after those additions and removal to the cost of acquisition. They are called, that amount is called the carrying amount of the asset. The carrying amount could also be referred to as the asset's written down value. We will demonstrate the carrying amount on the board, and it will make you to appreciate better how to derive the carrying amount or the written down value of the asset. Depreciation. Depreciation is defined by IAS 16 as the systematic allocation of the depreciable amount of an asset over its useful life. When we speak about the depreciable amount of an asset, the cost of acquisition of an asset and the estimated written down value or the estimated scrap value of the asset. The difference between the cost of acquisition and the estimated scrap value is the depreciable value of the asset. This is the amount that could be depreciated over the estimated lifespan of the asset. Depreciation, therefore, is meant to allocate the amount of a non-current asset to expense in order to match the cost to the benefit of ownership. The depreciation process is no guarantee that there will be funds available to replace the assets on which they are charged when they come to the end of their useful life. There are many terms that are used in accounting for depreciation. Depreciable amount. The depreciable amount is the cost of an asset or the amount substituted for that cost less the residual value or the scrap value. That's what you call the depreciable amount. The residual value is the same thing as the scrap value. The residual value of an asset is the estimated amount that an entity will currently obtain from disposal of the asset after deducting the estimated cost of disposal if the asset were already of the age and the condition expected at the end of its useful life. As we said earlier, the residual value or the scrap value is the amount that an asset could be sold for at the end of its useful life. The useful life of an asset is the period over which that asset is expected to be available for use by an entity. That is the useful life. That is the span of life of that asset. Or alternatively, the useful life of the asset could be the number of production or similar units expected to be obtained from the asset by an entity. There are machines that are configured to produce a maximum number of products, of items during their useful life or before they start to give trouble. So in the case of items that have lifespan in number of years, the useful life can be measured in time of period, time space. For items that are configured in time of production, then those items' useful life will be measured in time of output. Carrying amount. The carrying amount is the amount which an asset is recognized after deducting any accumulated depreciation and accumulated impairment losses. That's what we call the carrying amount. The amount which an asset will be recognized after the deduction of accumulated depreciation and accumulated impairment losses. The double entry that will be passed while accounting for depreciation. After you have gotten the depreciable amount and you have divided the depreciable amount by the useful life of the asset, there will be an amount, there will be a figure that we will get, and that figure is the annual depreciation expense for that asset. The depreciation expense that is written to income statement will be debited, and then the accumulated depreciation that will be written to the statement of financial position will be credited. And that is basically how we account for the depreciation. The next item that I want to consider are the depreciation methods. Of course, there are several depreciation methods, but according to IAS 16, a number of them can actually be used to allocate the depreciable amount of an asset or item of PPE over its useful life. And these include the following. Indeed, we have to work these items to demonstrate how they operate. We have what we call the straight line method. The straight line method is a method whereby the depreciable amount of an asset is spread evenly over the useful life of the asset, and this will give a constant depreciation charge in each year over the period of the lifespan of that asset. We have another method called the diminishing balance method. This is otherwise called the reducing balance method. The reducing balance method. In this method, the depreciation charge for an accounting period is calculated by applying a constant percentage to the carrying amount of the asset brought forward from the previous period. This method results in a decreasing depreciation charge in each successive period. It results in a decreasing depreciation charge in each successive period. Unit of production method. Unit of production method. In this method, what is usually adopted is the factory's environment where the machines are used for production. The method is useful for manufacturing environment where machines are used for production purposes. And the useful life of the asset is measured in units of production rather than in number of years. And depreciation charge from an accounting period is calculated in accordance with the number of units of production achieved in that period. This is very similar to the machine hours method, where the useful life of a machine is measured in working hours, and depreciation charge for an accounting period is calculated in accordance with the number of hours for which the machine has been used during the period. IAS 16 requires that the chosen method should be the one which most closely matches the usage pattern of the asset concerned. With this example, we will demonstrate the use of the three depreciation methods that are identified. And the example: Homeland International Hotels Limited is a 5-star hotel in the main business district area of the Federal Capital Territory. As a result of power rationing from the national grid and the need to provide uninterrupted power supply to the patrons and residents, the hotel management decided to acquire a new generator to serve as alternative power source. The hotel purchased the generator, estimated to have a 5-year span, at a cost of 4.5 million naira on 1st January 2015. At the end of its useful life, the generator is expected to attract a scrap value of 750,000 naira. The occupancy rate of the hotel during this period is as follows. Year occupancy in percentage: 2015, 52%, 2016, 48%, 2017, 54%, 2018, 45%, and 2019, 51%. Required: calculate depreciation charges for the lifespan of the generator using 1. the straight line method, 2. the diminishing balance method using 30%, and 3. the unit of production method. We proceed to the board to provide solution to this question, and the question incidentally will demonstrate the application and method of calculation of the three methods. The recognition. The recognition is the process of removing an item of PPE previously recognized from the statement of financial position. An asset is derecognized when A. it is disposed of, or B. no sale value through disposal as scrap. An item of PPE will be derecognized, i.e. removed from the statement of financial position when the item is disposed or no sale value is derived through disposal as scrap. Disposal can occur at any time and may not be at the end of the asset's expected lifespan. What are the disclosure requirements of PPE? The main disclosure requirement of IAS 16 are as follows. 1. For each major class of item of property, plant and equipment. A. The measurement basis used must be disclosed, either cost or revaluation model. We must disclose that the items of PPE are valued on cost basis, historical cost basis. They are valued on the basis of revaluation. We are also to disclose the depreciation method used. The depreciation method used. The first item is to disclose the measurement basis that is used, whether we are using historical cost or we are using revaluation model. 2, we are to disclose the depreciation method used. 3, we are to disclose the useful life or depreciation rate that is used. The useful life or depreciation rate that is used. 4, the gross carrying amount and accumulated depreciation at the beginning and end of the period. We disclose the gross carrying amount and accumulated depreciation at the beginning and end of the period. E, we are going to disclose a reconciliation between the opening and closing carrying amount. A reconciliation between the opening and closing carrying amount that will show additions during the year, disposals during the year, revaluation increases and decreases, revaluation increases and decreases, depreciation charge for the year, impairment losses, if any, assets classified as held for sale in accordance with IFRS 5, acquisition of assets through business combinations, acquisition of assets through business combination. The other item of disclosure will be the amount of any property, plant and equipment that is pledged as security for liabilities. The amount of property, plant and equipment pledged as security for liabilities. The amount of any contractual commitments for the acquisition of property, plant and equipment. For items of property, plant and equipment stated at a revalued amount, in addition to the disclosures required by IFRS 13 of fair value measurement. We are going to disclose in this one the date of that revaluation, whether or not an independent valuer was involved. For each revalue class of property, plant and equipment, the carrying amount that will have been recognized if the cost model have been used. Thank you for listening.